All right, let's pull back the curtain on something you've probably never even thought about, but it's basically the invisible engine of the entire global economy. It's the one thing that stops multi-trillion-dollar markets from, completely falling apart every single day. We're talking about clearance systems.
I mean, really think about it. When two huge banks agree on some billion-dollar deal, what actually makes sure the trade goes through? What's stopping one side from just backing out if the market suddenly moves against them? Well, the answer is this incredibly powerful but kind of hidden system that we're about to get into.
You see, the fundamental danger, the big boogeyman lurking in every financial deal, is something called counterparty risk. And it's really just the simple but terrifying idea that the other person in your deal, well, they just won't pay up. They won't hold up their end of the bargain.
So to really get why the solution is so brilliant, we first have to understand just how big the problem is. Imagine a world without a safety net, where every single trade is just a direct and pretty dangerous handshake between two parties.
Okay, look at this. On the left, you've got that direct trade. It's a really fragile link. If Bank B suddenly goes bankrupt, like Lehman Brothers did back in 2008, Bank A isn't just out of luck. They're facing a massive, catastrophic loss. And that fear, it spreads like wildfire. But now look at the right. In a cleared trade, there's this powerful middleman sitting right in the center, acting like a giant shock absorber. That fragile link between the two banks, it's gone, completely severed.
So who is this mysterious and powerful middleman? Well, this is the hero of our story, an entity designed specifically to solve this exact problem of counterparty risk.
It's called a Central Counterparty, or a CCP for short, and its job is, well, it's brilliantly simple. It just steps into the middle of every single trade. The moment a deal is made, the CCP becomes the buyer to the seller and the seller to the buyer. All of a sudden, Bank A and Bank B don't have to worry about each other anymore. Their only obligation is to the CCP.
So how does this whole thing actually work? Let's pop the hood and take a look at the gears turning inside this incredible financial machine.
So every trade has a life cycle, right? It starts with execution. That's the handshake, the agreement, and it ends with settlement, where the money and assets finally change hands. But that critical and honestly often misunderstood middle step, that's clearing, and that is where the CCP works all of its magic.
So, once a trade is sent in and it's matched up, that's when the really cool stuff begins. The whole process really depends on two super powerful concepts, novation and netting. And the whole time, the system is constantly managing risk. Let's break that down.
First up is novation, and you can think of this as a kind of legal magic trick at the heart of the system. Through this process, the original contract between two banks is instantly torn up and replaced by two brand new ones. Bank A now has a contract with the CCP, and Bank B has its own separate contract with the CCP. Poof! The direct risk between them just vanishes. Now, imagine a super busy day on the market. Bank A owes Bank B, who owes Bank C, who then owes Bank A, and you multiply that by thousands and thousands of trades. It's just a chaotic, tangled mess of individual promises. Trying to settle every single one of those would be a nightmare, and it would tie up a ridiculous amount of cash.
And this is the power of netting. The CCP basically acts like a giant calculator. It takes in all of a bank's trades for the day and figures out one single final position. So if you bought 1,000 shares but later sold 500, you don't have to worry about two separate trades. The system just says, okay, at the end of the day, you're getting 500 shares. All that chaos gets boiled down to one simple, manageable obligation.
Okay, so we've been deep in the mechanics, but what does this all mean for the financial system as a whole? Let's zoom out and see why this is so unbelievably critical for keeping the markets stable.
The efficiency boost here is just staggering. I mean, look at this chart. Look at the difference in the amount of cash or liquidity that banks need. Without netting, they have to keep huge amounts of money locked up just to settle all their daily trades. But with netting, that amount just plummets. This frees up billions of dollars that can be used to fuel the real economy, through loans and investments, instead of just sitting on the sidelines.
So here's the most important point. The number one job of a clearance system is to act as a firewall. By guaranteeing every trade, the CCP makes sure that if one bank fails, it doesn't start a domino effect that takes down the whole system. This is the lesson we learned the hard way in 2008. The system is designed to contain a single fire to stop it from becoming a full-blown crisis.
So it really all boils down to two huge benefits. First, there's safety. It manages that scary systemic risk. And second, there's efficiency. It frees up cash and makes everything more standardized and simple for everyone. It's this one-two punch that makes these systems absolutely essential for modern finance.
Now, for a lot of you watching, especially if you're in tech, the real question is probably, okay, how does a bank's IT setup actually plug into this massive global system? Let's get into the tech side of things.
From an IT perspective, there are a few key pieces to this puzzle. It all starts with a trade capture system, which just records the deal. But you can't just send that data over. A clearing gateway has to act as a translator, formatting it into the exact language the CCP understands. And then finally, you have a reconciliation engine, which is constantly running, acting like a super strict auditor, making sure the bank's books match the CCP's books down to the very last cent.
And I really can't stress this enough, that reconciliation has to be perfect. Any little difference, which they call a break, is a massive red flag that has to be fixed immediately. The entire system's integrity depends on the bank's internal record being an exact mirror of the CCP's external record. Every single day. No exceptions.
These IT systems are also the bank's eyes and ears for managing risk in real time. They have to process those urgent, we need more collateral now demands from the CCP. Those are called margin calls. They're constantly monitoring the bank's total exposure so they can plan for their cash needs. And they have to do all of this over flawless, high-speed connections using universal financial languages like SWIFT and ISO 2022.
So let's bring it all home. When you step back and look at the whole picture, these systems really are the invisible engine that makes the entire market go.
They really are the silent guardians, the unsung heroes working behind the scenes. They are the essential infrastructure that builds the trust we need for billions and billions of dollars to change hands every day, safely and smoothly. Without them, there's just no stability. There's no trust. And all this leaves us with one final, really important question. Right now, trading is getting faster than ever, assets are becoming digital, markets are more complex, the pressure on these safety nets is getting huge. So the challenge now is, how do these systems evolve to keep up? What does that next generation of market safety nets even look like?